running. Happy Tuesday, everybody. March 14th, and what a day it has been already. We're going to get started here in just a second. I want to make sure the technology is up and working and everything is working as planned. It looks like from my end we are good to go, so welcome. My name is Daniel, and I'm with VantagePoint AI, and we're going to take a look at how to trade options with artificial intelligence. How to use AI to trade options. We're going to walk through some details related to that. We're just going to give everybody a chance to get logged into the room here. This is obviously a live session, so hopefully everybody's having a good week so far. A lot of news going on in the markets today. Stark difference from the end of the week last week. So we'll talk a little bit about that. We had CPI year over year data come out. We had banking information get updated. Just a lot of chatter, a lot of fundamental type things impacting the market today. And we're gonna take some time to not only understand that a little bit better, but dig into utilizing artificial intelligence in these market conditions and really any market conditions. So once we get things kicked off here, we'll dig into that information. Just want to make sure the room is set up. We've got enough people joined up. So if you are in right now and everything is working for you and you're ready to get going, we do have the chat open. Feel free to chat with me anytime. I'll keep my eye on the chat. You know, this is it's one of the great things about doing these live sessions is that really we can cover a lot of information, a lot of material, and we can do a lot of things on the fly. So, you know, don't hesitate to pop in, say hello, and get involved with the chat. We're about to get things going here. I just want to make sure everything is working as designed. So if you've just joined, like I said, my name is Daniel, and I'm with VantagePoint AI, and we're going to take some time today learning how to use artificial intelligence to trade options and walk through the details. I'll start with a little just, you know, elementary level breakdown of options. We're not going to get into too many details related to that. I really want to spend some really good time in the artificial intelligence and walking you through how you can apply this in your day-to-day and why it's important. So looks like we've got quite a few people in here. So let's get things kicked off. First of all, I just want to make sure we are all on the same page. Hey, John, thanks. Absolutely. Not sure related to your question there, John. Not sure if you're in the right session, but if you are, we're going to be talking about the financial markets. So let's get things going. Just a quick reminder that we are going to be talking about trading today, and trading does involve risk. So you should not be trading with money that you can't afford to lose. That's why they call it risk capital, right? Capital preservation is key. It's important that we understand that you got to minimize your downside risk and maximize your upside potential, because there is no perfect solution. You know, we're talking about stacking the odds in your favor, all right? But there's nothing that's perfect out there. And I may share some user experiences with you today, and I'm sharing those with you to let you know that, you know, what other people have said about these strategies, about these technologies. This way you can understand it a little bit better, right? But their results may not be atypical results if I share them with you, and I'm not saying you're going to perform just like them. Also, we're going to spend all our time in a simulated environment right here in the technology. So let's start off really quickly. Let's start off talking about options for a second, you know, and just kind of get a good baseline foundation for options. And I always like to start that conversation with why I love options. You may not know options. You may know them very well. Heck, you could be an options expert. And I welcome all experience levels, of course. But you know, one of the key things here is options give you some leverage, some ability, right? The ability to control or trade larger sums of money, if you will, utilizing leverage. Risk is well known. Also, liquidity. You're not going to find a lot of stocks that don't have liquidity, that have options trading on them. So that liquidity is key, and you can really do some things within your technical analysis to identify those assets that have good liquidity because they'll have options and other information. So the profit potential, seen many options trades in the past go for 120, 150, 200, 300, 400% gains, not only because of that leverage and liquidity, but because of how trading with options is structured. And then, of course, protection. Knowing your downside when you get into the position, knowing what the max loss can be, entering that position gives you protection, but as well as for you investors that are out there, holding positions on a stock that you're an investor in that you like and the fundamentals line up and it's something you want to have part of your portfolio for a long time, stock's not going to go straight up. Not usually, at least, right? Well, from an options world standpoint, you can utilize options to mitigate some of those losses when that investment turns down, but you're not interested in selling it. You can protect that, kind of like insurance, if you will, through options trading. So a lot of great reasons why options are good. Let's talk about two of the basic, if you will, the two types of options trades. And you can use these two types of options trades in a lot of different ways to create spreads, to create trades on stocks that are expected to go sideways, lower risk. A lot of your risk reward ratio can be adjusted by using combinations of these two types of options. And of course, if anybody is interested or wants more information on this, don't hesitate to reach out. We're happy to dig into the artificial intelligence and options trading a little bit more. But a call option gives you the owner of that option the right to buy a stock. The right to buy a stock. So you don't actually buy the share of the stock when you buy an option. You're buying the rights to those shares. And a call option is something you would buy on a stock that you're expecting to go higher, right? A little trick, one of the tricks that I teach my kids is on a call option. You usually pick up a call, right? You pick it up, pick up the phone. You expect the stock to go up. So you're thinking about buying a call. A put option, right? A put option gives the owner the right to buy a stock on things that are expected to go down or sell the stock. So the one thing I want everybody to remember is a call, buying a call when things are expected to go up, buying a put when things are expected to go down. Now there's also the other side of the coin or the other side of the transaction here as an option seller. If you're buying a call on a stock that you're expecting to go higher, somebody is selling you that call. Just remember, they're selling you that call because they expect that stock or that asset to go lower. And that's the great thing about trading. Right? There's always different perspectives on which direction a stock might go. And that's where today's conversation becomes so valuable, because if you're looking to buy a call because you think something is going to go higher, then you got to make sure that you've got the odds stacked in your favor, right? And that's one of the key things. Hey, Jamie. Hey, Jeff. Thanks for being here. I see your comments in there. Fantastic. Again, just some basic information. In order to buy a call or buy a put, you've got to engage something called the strike price. For those of you that have never traded options before, that's the price at which a derivative contract can be bought or sold and refers to the price of the underlying asset. In English, Daniel, right? What does that mean? That means that is the share price of that asset, where you think that stock is going to go past in some cases, right? If you're talking about strike price, you're saying that's the price at which I'm willing to buy that stock. Because right now, as an option, you're buying the rights. Well, the strike price says, all right, well, that's the price where I'm willing to buy that stock. And that's a factor in options trading. So strike price is important. In a call option, the strike price is the price the option holder can purchase the underlying. That's the contracted agreement that says that is the dollar that you can actually purchase those shares if you've purchased those options going into it. In a put option, that's the price that the option holder can sell the underlying security. So again, strike price is basically the price that you expect that asset to get to. Easiest way to think about it in my book, right? And it is one of the factors that can determine how profitable your option is. The strike price is one of those factors. There's several factors, by the way. Strike price is one of them. Timed expiration, which we'll talk about the expiration in a second, and then the volatility of that asset. those three things are the basic components that can determine your profitability related to that option. Again, just laying a little foundation here. And then expiration date. That's the last day the option is valid. The expiration date is the last day the option is valid. After that expiration date, that expiration or that option has expired. I always like to use the example of car insurance, right? If you buy a car insurance policy, you pay for it monthly. You pay for that insurance at the beginning of the month, and it covers you until the last day of the month. The last day of the month is the expiration date. After that, you either got to make another payment to have it another month. Some of you may pay for a year, but you get my point, is that that option, that protection is covering you for a certain number of days. In the options trading world, that is the expiration date, and after that date, that option is no longer valid, okay? There are different expiration dates throughout the month. You may hear things like weekly. You might hear a monthly expiration, right? There's yearly expirations. There's, depending on the asset, the liquidity of that asset, there are different expiration dates. And you don't have to wait until the expiration date to exercise that option or to sell that option or make a decision on that option. If your strike price is reached and you've decided that it's time to get out of that position, you can make that decision at any point based on your trade plan. Again, I probably shouldn't use this example, but car insurance is the same. 2.5 weeks into the month, I can say, you know what, I'm canceling with this company, going with that company. I don't have to wait till the expiration date. Same thing here. And then volatility, one of the other pieces when it comes to options that can determine your profitability in an option. Volatility or implied volatility is a market's forecast of likely movement of a security's price. Likely movement, meaning volatility is the market's expectation that an asset can swing wildly. If something has a lot of volatility, then that asset can have some wild swings in price. In case you're wondering, high volatility traditionally indicates a drop in price. Volatility is kind of like a fear gauge, and when people get scared, things drop. But volatility in the options world is something that you can utilize to your advantage to really capture some fantastic moves. And in the options world, implied volatility is key because it is used to price options contracts. If I'm buying an option contract on a stock, well, if that has high volatility, prices are expected to swing pretty dramatically, which means the likelihood that I am right in buying that option goes up. So the person selling that contract is going to charge more for it, right? If there's a chance that I'm right, a higher chance that I'm right, they're going to want me to pay more for that options contract so that they have a chance of making more. Supply and demand are a key piece of this, right? Supply and demand are a key piece of volatility, right? If the supply is high and the demand is low, well, prices aren't going to swing pretty dramatically, right? But if the demand is high, right, and the supply is low, a lot of people are trying to grab that asset, I don't care what it is, well, that's going to have an impact on volatility. And bearish markets traditionally have higher volatility, bullish markets lower volatility. All right, so let's dive in. Again, I just wanted to set a little foundation there and get everybody on the same page. Just, and if you've got questions on some of that material, by all means, you can certainly jump into the chat and ask your questions. If it's something that I can't answer, I'm happy to answer your question. Again, I'm not here today to teach you how to trade options. Maybe we'll do that in another world, but I want to show you how to trade options with artificial intelligence. And that's one of the things that I really enjoy doing, is helping people understand how artificial intelligence, when applying it to the markets, can help. All right, good. Well, one of the things that we've been hearing a lot lately is SVB, right? When we talk about Silicon Valley Bank, obviously not being traded at this point, I have the chart pulled up, probably because you've been hearing about it nonstop, right? Nonstop. As of, Wednesday, Thursday last week. You tell me in the questions box, when did you hear about the Silicon Valley debacle? If you could, just let me know based on when you heard about it, read about it, got involved in it, or were thinking about it being something to be concerned or something to be considered. Most of the people that I've talked to or interacted with have been telling me, it was probably Wednesday, Thursday last week, some Friday, some over the weekend. Again, we're talking about Silicon Valley. If you could let me know in the chat, when it was something that, it won't register, Michael. It's no longer being traded. SVB is no longer being traded. But that's one of the key things that I wanted to talk about, because when we talk about SVP, and I'm gonna get a pen pulled up over here just so that I can draw on the screen a little bit. Let's see, here we go. Just give me a second. Let me see. Buy or sell actions be set and executed. Yep, I see your question there, James. Buy and sell actions can be set and executed for options in advance. Absolutely. Kiwi, let's Thursday of last week. Okay, so Wednesday of last week for James. 225 calls for TGHR. Yay. Okay, well, let's take a look. SVP, so we're talking about date-wise. This would have been Friday. I believe it was Friday. What's today? Today's the 14th. So Thursday, Friday, Wednesday, the 8th. The 8th was Wednesday. There we go, James. Got it. And so you said Wednesday. 2 weeks ago. Bill. Just reading the comments, Bill said about 2 weeks ago. So 2 weeks ago would have been, go date-wise, the 28th. So Bill, probably the earliest I've heard anybody talking about SVP, the 28th. I've got that marked here on the screen. Let's see. And then you invested in Signature Bank. I have Signature Bank pulled up over here. We'll talk about that one as well. All right. So just looking at the comments, it looks like the earliest I see is Bill's comment about hearing about SVP here on this date, the 28th. I've got it marked with some hot pink scribble, if you will. This is the debacle that, basically SVP is now closed based on, with the actions that have happened. And if you haven't read about it, I'm not going to dig into the details on this session, but SVB is basically shuttered. When the government has stepped in to help some of the deposits get covered, but still at the end of the day, a lot of traders have been talking about it and hearing about it for quite some time, and that's why I wanted to start here. I want to point out something and why this artificial intelligence is so valuable. If you look back over here, where I've got this arrow, and this is why I want to spend today's session on trading options with artificial intelligence. But if you look back on this day, right here is the day that the artificial intelligence said, hey, guys, there's something going on with SVB, right? The artificial intelligence. What I mean, what we're looking at here, in case anybody is wondering and isn't familiar, we're looking at the VantagePoint software. And what the VantagePoint software is doing is it's identifying market trends in advance with accuracy up to 87.4%. And why I use it is because I'm looking for trend changes in advance. And because the artificial intelligence is able to pick those up, this is a very valuable tool for me. And what I'm saying is when the blue line crosses right here, that blue line crosses in the shaded area between those, that blue and gray line goes from green to red. I think you guys can all see that right there. That's the moment at which the artificial intelligence is saying that it's picked up something with this asset. In this case, we're talking about SVB. The ticker was SIVB, but that's the point. 210, you can see the date here that it says, hey, this thing is expected to start trending down over the next few days. If this is an opportunity that somebody is long in, or an opportunity where this trend was moving higher, it is now coming to an end, right? So when we say 210, what I mean here is that the artificial intelligence went out and analyzed a whole ton of markets. Look, I'm going to show you really quickly, and then we'll dig into the options trading stuff. But how it knew 210 was something that was looking at. If I go into the market correlations here, I want to show you this graph. This is the intermarkets, okay? This is what the AI was looking at when this asset was being traded, right? It was looking at SVB Financial and then figured out that all of these other markets have an influence, some sort of impact, right? Everything from Fifth Third Bank Corp to the financial sector spider, right? Ultra financials. You can see there's a lot of financial assets in here, but there's also the dollar, the Japanese yen, the Dow, the S&P, the euro, international markets, domestic markets. Heck, Crocs. Crocs was in here. The AI said, hey, the price of SVB changes based on what Crocs does. And that's why this tool is one of those staples for options traders, in my opinion, because it's not just looking at the stock itself, it's looking at over 30 other markets that have an influencing factor on where that stock price goes. So when you're considering using something like this, and you want to trade options and you want to be right more than you're wrong, or at least you want your winners bigger than your losers. Let's go with that, right? Because being right more than you're wrong, heck, if you're a 50-50 trader, you win as much as you lose, but your winners are 3 times as big as your losers. That's a very profitable scenario, right? So if you look at SVB, this is February 10th. This is where the artificial intelligence said, hey, not only is this trend expected to go lower, but prices, this is an indicator called the neural index, this green and red bar. It's red, saying prices are also expected to be weaker. Here's some momentum indicators pushing lower, right? So we had a very good indication on February 10th. Let's think about that for a moment. If this was an asset that was going long and there was a great bullish opportunity, and then February 10th, the AI is saying, okay, things are expected to turn lower, what would you have done in that scenario on February 10th? If you had an artificial intelligence program doing global market analysis and it figured that out, and you had that trust and faith in that technology, and by the way, the one I'm using in this case, this is VantagePoint. It's been working since 1991, patented technology. That process I just showed you, that intermarket analysis, is patented. There's nobody in the world doing that analysis, which is why I rely on this from an options trading standpoint to understand what's expected to happen, right? So if you look at this, and you see this crossover, this is the bullish indication of that trend. You see the neural index agreed. You see the momentum indicators pushing higher. Everything was indicating bullishness at that time. Well, now you see that trend up, trend up, trend up, trend up. Big profits to be made, whether you hold the underlying or you buy a call option at that point, and then the reversal expected right here on 210. I think it's safe to say if you're in this session and you would have seen this information on February 10th, this downfall, maybe not the total collapse, right? I'm not by all means not saying that this artificial intelligence said you can expect SVP to be a total shutdown. No. But February 10th, the artificial intelligence said, hey, if you're long this opportunity, this thing's expected to start turning around. Not last week, right? Not 2 weeks ago. February 10th, a month ago, this AI indicated that. And we can even go as far as to layer on some indicators, like for instance, say I put on some momentum indicators. Look, I'm going to put on percent R, stochastic. Let's put on, MACD. Heck, I can even put on some support and resistance indicators to see if I would have gotten some of that confirmation, that expectation. Look. And here's some of the indicators that I like to rely on. I can see that there was a resistance level. And I'm not going to go into the details of all the indicators. I'm not trying to show you all of that today. I'm happy to. All you've got to do is go to VantagePointForecast.com if you want to get into this a little bit more. But in order to cover how to use this for options trading, I just want to go to a good baseline for everybody to see that there was resistance up here. Very clear resistance. February 10th when that cross happened. Clear resistance saying, hey, things are expected to go lower. Also, look at momentum. MACD pushing lower, right? That blue line crossed over on MACD and went lower. Stochastic had been pushing lower for days. And by the way, I'm not just looking at a regular MACD or regular stochastic. These have all been enhanced and predicted with the artificial intelligence. The AI in this case is predicting MACD one day in the future, stochastic one day in the future, and percent R one day in the future. So on this day, Get some of these scribbles off the chart. I knew with a high degree of accuracy, and anybody that was looking at this in VantagePoint, that SVP on this day, not a very straight line, but you get my point, that things are expected to go lower. Cross, red knurl, momentum pushing lower, predicted MACD pushing lower, predicted stochastics pushing lower, percent R, predicted percent R. You can't get this percent R anywhere else but in the VantagePoint software, pushing lower. All of the predictive indicators on February 10th said this thing is expected to move lower. Well, using that opportunity, had you just gone crossover to crossover, you can see that's about a 40% move on the underlying asset. This is a hypothetical trade here where you could see you could have been up 40% in 30 trading days, right? 5 contracts, 500 shares. That's a substantial gain there had somebody taken advantage of it just like that. But more importantly, why I'm bringing this up so that we can dig into the rest of the options conversation is this moment right here on February 10th was blatantly obvious. Unfortunately, Bill, that moment right there was also very clear on this stock. Here's Signature Bank, buddy. I'm sorry about your situation there. Not a happy situation for you, but same thing, February 10th, same indication. Now this is SBNY, right? SBNY, and I think it was Friday, the CEO or one of the board members, maybe the chairman of the board, I don't remember his name, resigned, right? SBNY, same situation, same indication. The artificial intelligence had a very clear indication that this was expected to go lower. Expected to go lower. I think everybody can see that since that day, for the last month, it has certainly gone lower, and then also caught up in the SBV conversation as well last week. So, Bill, I wish this was something we had talked about, or you and I at least had a chance to talk about sooner, because call options in the last month on SBNY, you can see from the artificial intelligence forecast, because that cloud between that blue and gray line has been red the entire time, probably would not have happened. You can tell me in the chat box if that's the case. And you know, it's and this is why I do what I do. This is why we have these sessions. These are free live sessions so we can see what is possible with the right tools and information. This indication was clear on that day. Here's US Bank Corp. Let's take a look at another one. Here's one that is still being traded, right? And you can see USB, US Bank Corp. When I look at US Bank Corp, I can see there's a cross to the downside. Check out the date on USB on that crossover, right? Everybody can see that date, I hope. It says February 9th. It's a day before the other ones we've looked at, but almost the same exact time, right? Almost the same exact time. You can see it here. This is valuable information to have, right? This is valuable information to have, and you can see buying some puts on February 9th on any one of these assets, you could see could have been very, very lucrative, very profitable. So how in the heck would somebody go about using this information to trade options, right? Let's dive into it. Now that we've got a good baseline and we understand somewhat what we're talking about and looking at, let's just use this as an example, US Bank Corp. Here's the crossover. That's the first indication I'm looking at to say, all right, things are expected to start going bearish. Here is the Neural Index. It's red, indicating at the same time that the crossover happens, prices are expected to be lower. I've got momentum creating lower highs. Let me expand this section here so you can see the bottom section and see those momentum indicators. Momentum peeling off bearishly going into February 9th. That's predicted momentum. A fresh bearish momentum crossover on the predicted MACD, the predicted stochastics, and lower highs being created on percent R. That's predictive as well. All right. So I'm using my predictive indicators at this point to say, hey, you know what? In this example, USB is expected to go lower. If you're in this session and you're looking at this and you're saying, I can see very clearly on February 9th, USB was expected to go lower, what do I do at that point? Well, the close on February 9th, because we're looking at end of day data, the close on February 9th was 48.77. So this is the point at which you're looking to buy some puts, or maybe you option sellers, you're looking to sell some calls. Regardless, you're expecting this to go lower. We're just going to talk about simple verticals right now and say, all right, if I'm expecting this to go lower, I'm looking, in this case, to buy some puts. Well, depending on your risk tolerances and your trade plan, that's something everybody needs to do is get their indications from whatever tools they're using. In this case, I'm using VantagePoint AI, and then apply that to a trade plan, apply that to the risk tolerances, the money management keys, right? I can then go look at USB and see if I bought some in the money puts at this point, maybe $48, right, on this day, 2.9, or I could even go out of the money if I wanted to save on premium, but out of the money is a little riskier than in the money, but in the money costs a little bit more in premium. And here's what I mean. If I'm buying an in the money put, meaning I'm selecting the strike price of 49, if I'm selecting the strike price of 49, I'm buying in the money, meaning that stock is already lower than 49, right? Which means when I buy that option, I buy that right to those shares, I can execute and buy those shares at any point that I want to below 49. It's already past 49. So the premium is going to cost me a little bit more. If I want to save a little bit on my premium, increase my risk a little bit, I can go buy the 48, which is just out of the money. I can even go buy the 48.50, which is still slightly, I guess that's right at the money, 48.50, somewhere in that range. I can do that and save a little bit of my premium, but that depends on my trade plan, right? I'm not telling anybody to buy in the money or buy out of the money. That's up to you, or at the money. Heck, I could buy a 50 put if I wanted to buy deep in the money, as long as the premium and that trade setup matches my trade plan, right? Again, I'm not providing trading advice, but from an educational standpoint, understand that you have the ability to change your premium by changing how deep in the money or out of the money you pick from a strike price standpoint. Now, I also have another decision to make, not only strike price, but I have a decision to make around expiration date at that point. Remember, this is February 9th. Just like in car insurance, that option is going to be good for a certain amount of time. I get to pick that amount of time, and that's the expiration date. Well, what I've found I like the most, a lot of traders that I talk to and train with and work with like the most, is this around a 60-day expiration. Now, I'm not saying I'm expecting to hold this for a 60-day period. I'm just saying I want to give that option enough time to mature, meaning I want prices to work lower. If I want prices to work lower in the current marketplace that we're in, we can see prices trend for week, 2 weeks at a time. I'm not going to buy personally. I'm not going to buy a weekly expiration in this situation if I'm looking to swing trade using options, because my expiration date may run out before I hit max profit, or I hit the profit target that I'm looking for, right? So setting my expiration out 60 days, meaning this is February 9th, I could buy a monthly expiration to the end of March, right? I could do that. I could even get into April expiration. By the way, if you don't know, the third week of the month is when those monthly expirations expire, the third Friday. So March would be the 17th if I'm looking at the calendar. April, I'd be looking at the 21st of April. So let's say, on February 9th, that night, I see this forecast. I'm confident that this is expected to move south. My artificial intelligence is telling me that's the case by looking at those inner markets. It's done all the analysis. All of the patented technology is saying USB is expected to go lower. I can set my expiration out to the end of April, right? I could set my strike price, say at 49, just in the money, not too deep in the money, but just in the money. And as long as that price drops within the next 60 days, I can be profitable if it drops at the right pace, the right rate. Because my expiration is out to the end of April, there's something in options called time decay. I am affecting time decay. What time decay is, in case you're wondering, is the closer I get to expiration, the more that price has to move in my favor for me to be profitable. For instance, if I get close to expiration and prices don't drop in this scenario, but just stay stagnant, my option is actually losing money. The closer it gets to expiration, the more it has to fall in a put scenario for me to be profitable. Well, with a 60-day expiration, you can see if I had just taken a 60-day expiration and I went from the very next day to, let's go end of day yesterday. I'm just going to go end of day yesterday right here. That underlying asset in 21 days time has moved 25%. That's the underlying asset. Well, in that scenario, trading this, using this, taking advantage of this from an option standpoint, that's produced probably 100, 150% in gains using this strategy that I kind of just laid out here. And don't worry, we're going to walk through some fresh opportunities and assets that we would have seen last night. But from a trading strategy standpoint, I like to rely on the artificial intelligence in this case, get the indication of the AI, make sure I've got the indicators that I need to make that confident decision. And I, of course, can keep on layering on indicators. I've got a few here, but I like to use, in some cases, 20, 25 indicators to get that real confidence. And obviously, you can see they're predictive here in the technology I'm using, the VantagePoint software. But this stock right here would have produced handsomely to the short side by buying some puts starting on February 10th. Now, there was a question about setting things automatically, and the answer to that is yeah, of course, depending on your broker. But I can go into my broker's platform after this updates, and this updates at 6:30 p.m. Eastern time, and this was February 9th, right? I could go into my platform on February 9th and set an order, a limit order, to buy some puts, when the market opens the next day and hits a certain price, to buy some puts with a 60-day expiration, right? 60-day expiration and a $49 strike. That may get filled automatically if my limit matches where that stock was, and in this case it certainly did. But in this case, you can see I could do that at night, go to work the next day. I'm not talking about day trading and sitting in front of a computer. I'm talking about making a decision the night before, setting that order and letting it get filled or not. Not everything's going to get filled, and that's okay. I don't have to be overly emotional about it. You set up the opportunity, set up the trade according to your trade plan, according to the artificial intelligence forecasts, and then you let it play out. And in this case, you can see that's a very valuable example here on a stock that you probably weren't thinking about until the last week or two based on SVB and SBNY. Just taking a look at the chat here. How to calculate target price from the beginning based on the information in VantagePoint. Absolutely, Alex. We're going to do that right now. We're going to absolutely talk about calculating the strike price, or as you wrote, as a target price. I've got a great tool in VantagePoint that'll help me do that. Let's go take a look at this stock here, UAL. Right? This is UAL. This is United Airlines. This is a stock that had a clear forecast just recently come up, okay? So we're going to walk through the strategy where you could use this information from a shorting opportunity standpoint. This is February 10th. So we're talking about getting a fresh forecast on Friday that UAL was expected to go lower, right? This was the end of the day. On the 10th, the close on that day was $50.97. So right about there, $50.97. You can see not only did the blue line cross below, but the artificial intelligence said that prices were expected to be weak. We had momentum and timing forecasted lower. We had MACD, predicted MACD saying lower. We had predicted stochastics clearly saying lower, and we had predicted percent R fall off a cliff, right? This is United Airlines, UAL. Well, this is the point at which a lot of traders will look at that and say, okay, you know what? I'm expecting this to go lower. I need to make a decision on how low I'm expecting it to go, for instance, and how far out to set my expiration. Again, this is a great example where I don't have to really worry about how far out I should set my expiration, except to say I'm looking around the 60-day mark, right? 60-day mark. Well, let's say April is 30 days, May is 60 days. So I can go into my platform, right, and go find the May expiration that I'm looking at, try to decide what expiration I'm thinking about here. May 19th would be the monthly. I could go May 26th, May 12th, there's different weekly expirations, but if I'm just using regular monthly expiration, May 19th. So I can set my expiration out that far. Again, the close price of UAL when this forecast came out was $50.97. And at the money put would be basically a $51 put, right? That would be an at the money put. And out of the money, I could go buy, I'm talking about calls instead of puts. It would be a $50.50 put, depending on what it is. I could go out of the money at 49. I could go out of the money at 49.50. Again, a lot of different ways to slice it, but we can see that no matter how I slice it, whether I buy deep in the money and buy a 52 put, a 53 put, no matter how I slice it, I've got enough information to know I need to buy a put. Now, if I'm trying to decide the strike price, to answer your question, I think it was Alex, if I'm trying to decide the best strike price to save the most on premium but getting the money very quickly, check this out. Here's a little gray candle out here. You can see that this gray bar appeared. Let me see if I can make it a little bit bigger. I'll zoom in for you. This gray bar right here is the predicted high and predicted low for the next trade day. And you get it every single day in the VantagePoint software. I don't know about the tool you use, but I use this as a tool to help me understand strike prices, if you will, or where a good strike price could be where I can save on my premium. If your trade plan says you can buy an out of the money put, and remember, you're the one that make your trade plan based on your risk tolerances, not me. But if the close on this day was $50.97, and the predicted high is saying, you know what, this thing could go as high as 50.47, and you can see it could go as low as, in this case, predicted low 47.94. I've got a pretty good range there. If I'm picking a strike price, I want a strike price that's going to be within that gray candle. So I've got several strike prices to choose from, Alex, because that range gives me a good range, right? Again, the predicted high of 50.46, predicted low of 47.94. That means I could buy a 50, I could buy a 49, a 48, depending on this stock. And not every stock has 50-cent strikes. Not every stock has $1 strikes. So you can just go and check your platform if you're an options trader on UAL and see where the different strikes are. But in this case, I've got a pretty good range all the way down to 48 bucks, between $50.50 to 48 bucks, where this gray bar says those are in play because this is the predicted trading range. The further out of the money I'm going to buy, the less my premium will be, but the less likely I'm a winner, in case you didn't know that, right? Out of the money options are less expensive to buy. The premium is lower because the likelihood that you're a winner, the further out of the money you go, is lower. So the option seller says, yeah, I'll sell it to you cheap, right? Think about that. So, buying, it's going to cost you more. Not everybody can afford that, but it is going to cost you more to buy closer in the money. Closer in the money you get, the more money you make on that option. If you're right. If you're wrong, obviously the risk is there. You could lose quite substantially. And a little stat for you from an options trading standpoint is something like 85-90% of options expire worthless. And part of the reason for that is because a lot of traders will buy out of the money really far to lower their premium, but it lowers the likelihood that they win, right? So think about that. Think about that as you go through your trade plan to make your trade decisions. But this gray bar, Alex, and for everybody else that's watching, is giving me a good sense of where I can set a strike price. I also have some other tools here in the VantagePoint software I like to use, for instance, like a strike price indicator, where it will show me the strike prices for UAL right here on the screen without having to go to my platform, a trading account, and say, okay, this red line, these are in the money for a put scenario. These are in the money strikes, and these green lines are out of the money strikes. But what I've done here is I've layered them right on top of that gray bar. I know sometimes for me it feels like I've got a major advantage when I use VantagePoint over other traders, because not only do I have a forecast of this trend, I've got a predicted trading candle, and then I've got strike prices layered on top of the trend and that predicted trading candle right here. Yeah, Mike, I love it. Mike says if you buy out of the money, be prepared to fail. That's what I was trying to get across, Mike, is that the further out of the money you buy, the the lower the likelihood you're right, which means you're not going to make money. But that doesn't mean you never make money, right? You just have to understand you increase the likelihood you're wrong the further out of the money you go. Some people say buying out of the money options is like burning cash, right? You got to think about that. You want to increase the likelihood that you're right, but not at your risk tolerance expense, right? Meaning I'm not suggesting, and I'm not providing trading advice, but in any way, I'm not going to blow out my risk ratio. Meaning if I'm willing to put $1,000 into a trade, which is 2% of my account from an option standpoint, let's say that's a hypothetical example. I'm using 2%. And I'm trading with that amount to say, okay, that's how much I'm willing to lose. Well, if I buy closer to the money options, am I able to buy, right, one contract, two contracts with $1,000? Don't risk money. In my opinion, I don't think it's worth it to risk more money than I'm willing to just to be able to buy that option. Go find something else that matches your trade plan. And I like the way you think. Yep, there is, Pat. There is absolutely a scanner to help find these opportunities. Agreed. Yep, and I'll show you how to do that. But when you look at this, you can see very clearly. That there is strike prices layered on top of my gray bar. So I know if this was the close, for instance, on this day, that I've got the opportunity to buy several strikes within that gray bar. There are 1, 2, 3, 4, 5 strikes touching that gray bar. So to answer Alex's question and anybody else's question, in the VantagePoint software, I can use this tool to say, okay, these are all touching the gray bar. Any of these would be a good selection for strike price. If I buy out of the money this far outside of that gray bar, well, heck, the AI isn't even predicting that. Doesn't mean it's never going to happen. It just means increase your probability that you're right. Apply the artificial intelligence in a way that can give you an edge to increase the chances that you're profitable. Seems like a recipe, in my opinion, that could be very, very successful, right? This is UAL. We can go look at UAL and see what it's doing to see if the AI would have been right here. Let's look. And I can pull this over. I'm just going to look at the live scenario currently right now. Here's United Airlines, 46.62. So it's way down here right now. 46.62 is about here. So again, this is a very valuable forecast that at this point is very right from a bearish standpoint. And by the way, in case you haven't looked at the markets today, this is a stock that was forecasted to go down and is still going down, yet the Dow is up almost 400 points, right? Think about that. UAL is moving further south, even though the market is charging based on CPI data, which we'll talk about, based on the SVP conversation. But no matter how you slice it, the AI indicated this was expected to go lower, and it's continuing lower regardless of what's going on. That's how powerful this is. You're going to find some counter trend opportunities, but also some really good things that are going with the markets. Nissan. And I know the question is, how do you find these? I'll show you some of these here in a second. I just want to walk through how to do this, again, using this information. So we get across to the downside, right? We can see that cross right here, 3.9, 3.10. You can see it. Bearishness is certainly working itself in. Let's be ultra conservative and say, you know what? I'm not confident until 3.10. That's okay. I'm okay with that. Remember, this is on top of a very bullish trend. Nissan was going up substantially. If we just go to 3.10, I'm just going to go to the end of the day that day. That's a 20% bullish gain to the upside on a stock that was, $7. Maybe you're not doing options on something that low. Heck, I don't even know from a Nissan standpoint if it's optionable, but this is something that came out of the artificial intelligence as a bearish opportunity, and you can see it's going lower, and we can go check and see if it is going lower. Yeah, it gapped down today, so a great opportunity. I'm going to go to Warner Brothers because I don't know if Nissan has options, if you'd even do it, but here's Warner Brothers. Another example where we can talk through the details from a strike price standpoint. 3-2, we had a cross to the downside. The neural index didn't agree. We had total confirmation on 3-7 for WBD, Warner Brothers Discovery. All right. Question is this something that I could have taken advantage of and traded to the downside after the data came out on 3-7? Blue line crossed below, the neural index was red. Predictive differences, look, bearish. For those of you that don't have VantagePoint, I know sometimes I go through it very quickly. Let me slow down. The blue line is below, saying trend is expected to go lower. It bounced off of a resistance point, 2 resistance points, creating a bearish push to the downside. Here's one, and you can see we've got a very clear resistance level pushing bearishly on price on this day. Neural index, red. The AI saying prices are expected to be lower. Momentum just kept on going lower, 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 lower. Bearish. MACD, bearish. The blue line is below in our predicted MACD. Stochastics, predicted lower. RSI, lower. All right, so going through our indicator check really quickly, we can see that on that day, 3-7, we're clear. 3-7, WBD was expected to go lower. Again, 60-day expiration. Using this information to set a strike price, I would use the gray bar that would have been here on this day, the next day. I do have a view where I can go look at where that gray bar is, by the way. Here we go. This green line would have been where that gray bar high was, and the red line would have been where that gray bar low was. I'm just going to draw a little box to show you what I'm talking about. That gray bar is predicted every single day. It doesn't stay on the chart all day, every day in the future. But I put it on the screen, and that pink line that I just drew to say that's where VantagePoint said this was expected to trade the next day. Kind of funny because the actual candle is within that exact range. That gray bar, by the way, that predicted day's data would have been updated this night at 6:30 p.m. So using that information to set my strike and find a strike on WBD after this closed at 1482, again, at the money would have been about a $14.50 to $15 strike right there around the close. That would have been inside the gray bar based on the strategy that we were talking about a second ago. That would have been inside the gray bar, saying the likelihood that you would have gotten filled is high. And the 3 days that followed that created a substantial move. Heck, that could have taken out your target, depending on what your target is, in just a matter of a few days. All right. Here's something else to consider. Look at this. All right. We did some work on this in the last live. If you didn't catch the last live, by the way, you can go to the VantagePoint AI channel. By the way, if you're not subscribed, subscribe. If you don't get notified of the lives, maybe something you want to do, because in the last live, we broke apart support and resistance in a lot of detail. And I want to highlight something that we talked about last time. Warner Brothers, WBD, tried to break this support level. Price fell below the support level, but by the end of the day, came back up and closed right at that support level, right? That is very telling about what I can expect. There's also a predicted high in SVP today. This was predicted last night, saying you could expect it to go up to, I said SVP, I'm sorry, WBD. The high is predicted to go up to 1422, right? So what we were saying, what the AI was saying here is that you could expect this thing to trade up here around that 1425 range today. Nothing about anything that's happening in WBD is unexpected. For those of you that are using the AI and applied it the way I'm just applying it right now, know that the very profitable trend, heck, you may have already taken out your target. Maybe your target's 10%, 20%, 25% from an options trading standpoint, but that the last 3 days could have really produced well for you. If you didn't, you're expecting prices to float up to that 14.25 range based on this. Nothing is unexpected based on what's happening today. And you can see the predicted momentum indicators starting to round out and shift. You can see that shift is on. That's the power and momentum. I can see these things happening early, and I would have gotten all of this at 6:30 last night. So from an options trading standpoint, although I have a 60-day expiration, I could have sold to close that position first thing this morning and taken some profits out of WBD. The other question that I love to answer, a lot of traders have is, what about bullish? I don't buy puts, right? Let me look at the questions box, see if there's any questions that I'm missing. Yep, we'll talk about the scans. There we go. As it is, they're having 500 to 1. Yep. How do you layer the option strike price onto the gray bars? Well, all I did in that case is I went into my price category, and if you have the VantagePoint software, I don't know if you do, but if you do have the VantagePoint software, this is an indicator that you can add to your license to layer that on. If you're an options trader and you don't have that, let us know. Just give us a call and let us know that's the case. Or you can just, say call me in the questions box, and when I'm done here, we'll have somebody reach out to you. But all I did was click that strike price indicator and adds it right on top of that gray bar. Bullish opportunities, CMG. Take a look at this really quickly. For you options traders out there that are trying to see whether or not the artificial intelligence forecasts are valuable or not from an options trading standpoint, just take a look at what's going on here. This was a bearish trend that was forecasted until it was forecasted to be bullish, and then the trend went higher till it was forecasted to be bearish, and then the trend went lower, and then last week, beginning of the week, it was forecasted to go higher. We'll talk about that trend in a second here, but just think about having this kind of information on a consistent basis as an options trader so that you can see whether or not this is something that you could apply to your trading, right? The underlying asset in these four trends move pretty substantially. These three trends, the underlying move 22, call it 30% roughly. It's hypothetical, but you can see 30% change in price over these three trends. Well, take a look at this artificial intelligence set on 3.7, 3.8. Blue line above, neural index is green, right? So we got a trend forecast expected to be higher. Neural index forecasted expected to be higher. Momentum creating higher lows. Fresh crossover on MACD, fresh crossover on predicted stochastics. Again, these are predicted with the AI, right? All great tools and uses, indicators telling me that's the case. I can even, by the way, go check out the implied volatility related to this if I wanted to. I can go and use some of the other features in VantagePoint. I'm not going to do them now in this session, but I have implied volatility. I have an implied volatility rank indicator that can tell me whether or not the volatility is in the right place to buy calls, sell puts, or trade this depending on my trade style. It's all available in the AI. But I could see very quickly on that day that there was some bullish opportunity on CMG. Same strategy, the close price on this day, 1533.06, right? That's the point at where I'm saying, okay, I'm looking to buy some calls. I can set my expiration out 60 days from that point. Let's go again with that April expiration date for those of you that like to set your expiration out. The reason, by the way, the question about why would I set my expiration out that far if I'm only expecting to hold this for a couple of days or a couple of weeks, the answer to your question, time decay, right? If I set my expiration out 2 weeks, well, that time decay clock, it's moving really fast. The value of that option can be impacted dramatically if that stock even goes sideways. Heck, if I'm bullish a stock and I buy some calls, but I don't set my expiration out that far, well, that stock could go up and I could still lose value in that option. Well, if I set my expiration out further, I slow the time decay clock, right? You ever notice that with food, for instance, An apple will stay nice and firm. It won't start decaying for a week or 2 weeks, or depending on how hard you buy it, right? But as soon as it gets that one brown spot, that thing decays really quickly. It's like that brown spot turns on that time decay clock, I like to call it. And again, I'm just, from a basic understanding standpoint. Well, options are the same. The closer you get to expiration, the more time decay is going to hurt you. It's going to hurt the value of that stock. So I set my expiration out a little further. It's going to cost me a little bit more in premium, right? But I don't have to be so worried about time decay hurting me. I'm not expecting, unless this thing is zooming in my favor, to hold it 60 days, right? I'm expecting a couple of days, a week, 2 weeks maybe. That's it. Got a target, I got a trend I'm looking for, right? That's the same thing that you can utilize these indicators for to understand what's going on related to this asset, in this case CMG. So I'm going to layer on my strike price indicators again and say, look, okay, there's a lot of strikes on CMG, a lot of strikes. And yes, delta is a part of it. There's a delta indicator that I can look at to see which strike is going to get me the best delta, right? I can do that if I've got that tool. And you can see that on the screen here. There are a lot of strikes available right here on CMG. Very easy to see. The close price, again, close price was the crossover point, 1533. Well, yesterday, there was still some opportunity from a bullish standpoint for CMG. The close price yesterday was 1566. So it's already up from the forecast last week substantially. I mean, that's a $28 price change since the forecast, a positive price change. If I had bought some calls on that, that's a very profitable move. Well, what I opened here is a window that says, here's all the strikes available on CMG. Now, obviously, you've got to master the VantagePoint indicator before you can get strikes and delta, right? We don't just load your software with all of these enhanced indicators right away. For those of you that don't have VantagePoint, by the way, and you want to go to VantagePointForecast.com to get more information on it, we'll put the link right in the chat. For those of you that don't have it already, we're going to layer in the learning, right? We're not going to push all of these indicators in the software from the get-go. We're going to give you the opportunity to learn the basic indicators, the crossover, the neural index, some of the momentum indicators. And then when you've got those mastered, we'll give you the ability to get some of the other momentum indicators and support and resistance. And then when you've got a good foundation built with those, we can layer on strike prices and delta, right? We're not going to be a deluge of information. That's not how I would want to learn. It's not how adults learn best. We layer the learning. We layer the indicators to give you that opportunity to be successful, right? So when you look at this, you can see what I'm looking at here is, here's the strikes in this column, here's the deltas that go along with them. If I'm an options trader, I'm probably looking for a delta that's around that 60 mark. Maybe you go 58, you can see here's the different expirations out to April 14th. I've got the ability to find a good move using this information. I can use the near-term expiration to find the best delta, and in this case, 1550 would be something that would meet, a good trade expectation. Remember, the close yesterday is 1566, bullishly. 1550 gives me a good delta, and it's in the money, and it's literally within that gray bar. Look, let me show you. It's in this gray bar. Here's the predicted high and predicted low. 1550 is right there. It's touching the gray bar. So I know that is from the strategy that I apply to VantagePoint, that is a good strike if I was looking at buying this off of last night's information, right? Because this updates at 6:30 p.m. Eastern time, right? Now the price of Chipotle is way past 1550 today. It's a bit like 1580. But again, the ideal opportune time using this forecasted information was 3/8, right? 3/8, this day right here. So the real key to utilizing this information, in case you're wondering, is right after that crossover, there's a great opportunity. That's this day, which means you're executing on this day and you're taking advantage of the bullish trend that's going in CMG as we speak. Let me just take a look here at the questions box. Haven't done anything with gold yet, Bob. Yep. Eunice will reach out and you go 2 to 3 months out. Exactly what we're talking, Mike. You like to go 2 to 3 months out in liquidity and extrinsic value. Selling within expiration will help you grab some of that intrinsic value, right? You can certainly make more money with longer expirations. You read my mind. You heard what I said. We're on the same page, Michael. And for anybody else, if there is a certain asset you want to take a look at, a certain stock you want to take a look at, pop it into the questions box right now. I want to show you something that came out of the scan last night, mRNA, Moderna. And here's a scan that I'm talking about. If I go, we have a tool called IntelliScan. If I go and open an IntelliScan and I'm looking for a new bullish opportunity, I have some indicators, right? I have some indicators that we're explaining and we're talking about today, right? The crossovers. I've got them set up to go find new opportunities. Look, this scan looked through 1,600 different stocks that are available in the VantagePoint software, and it's telling me there are 10 that could be a good opportunity. In that 10, here is Moderna right here, right? There's Moderna right here. It's got 5 million shares traded. And I've got a great indication based on this scan that this is expected to go higher. Okay, so let's go do some analysis on this. Let's say it was 6:30 last night or maybe first thing this morning. You and I are sitting together looking at my VantagePoint, and we can see the blue line crossed above. We can see the neural index was green. We can see that the predictive differences are forecasting higher momentum from a timing standpoint. These are proprietary indicators in VantagePoint. And then we go look at the predicted MACD. There's a fresh crossover in predicted MACD. Here's a fresh crossover in the predicted stochastics, bullish, bullish. And by the way, fresh crossover, that's my terminology. You call it what you want, but I like to call it that because this is saying these are fresh indications of bullishness, right? Fresh indications of bullishness. And when I look at that, I can see that it's broken through that resistance. So I've got to make sure I have enough momentum to push deeper into that resistance. I have to make sure that I have enough volume to push deeper into that resistance. I can put on my volume indicator and see I'm getting increasing bullish volume. So from a trade setup standpoint, I've got enough information here on Moderna to say, you know what? I've got a great bullish opportunity on mRNA. Right? The close yesterday, 147.90. 147.90. Let's go grab our strike price indicator, pop it on here, right? You're walking through, by the way, we're walking through exactly the setup that I would be looking at from a trading options on mRNA standpoint. Now, this is last night, of course. This information updates at 6:30 p.m. Eastern time. I don't care if it's 9 o'clock at night, 10 o'clock at night. Using this at that time, that's key. That's key. All right, so here's the close. Here's all the strike prices within the gray bar, right? I don't have to worry about these. They're way out of the money outside of the gray bar, right? I don't have to worry about these. These are deep in the money. I can buy them if I want to pay the extra premium. But the ones that I'm really concerned with are the ones that are touching the gray bar. If it's touching the gray bar, it's interesting to me. The close again was 147.90. So if I'm looking at somewhere around that close, I've got a strike price right there. Oh, I double clicked it. Sorry about that. I got a strike price right there, basically at the money. Let's go take a look at that delta on that strike price, 147. 147 near term, 55, pretty close. So 147 on Moderna with a 55 delta is this strike right here at the money. Okay, I say 147, 148. Let me go look at the 148 here. 148, 51. So the delta goes down slightly, but still in the 50s. I probably wouldn't even consider anything under 50, but that's, you know, my risk tolerances when I'm looking at these trends. 147 gives me a 55. 147 is in the money a little bit further, so that gets me higher. I can go 146. So I've got plenty of room. It's going to come down to premium. I can get any one of these strikes from 148 down. It's going to come down to the premium. You know, let's go with that 147, 146. Regardless, that's up to you. I can go and set my position based off of that information. Again, if I grab a 147 strike with a April expiration at 6:30 p.m. Eastern time last night, I can go and set up my limit order right into the software based off of the bid ask and make a decision on that. And I look to get a fill as soon as the market opens. If the market opens and I'm sitting in front of my computer and I don't get that fill, I can make an adjustment to my limit as long as it doesn't go outside of my tolerances, right? And in this case, the question is, would that have gotten filled and would I be up at this point? Well, let's look. All right. This came right out of the scan. You guys saw me pull it out of the scan. Basically right there, you can see from an open standpoint on the day, we got an open today. Here we go. Open today of, I keep going over 148.98, boom. And it's up at this point today. So again, IntelliScan found it. The indicators identified it. My options indicators gave me a good place to go based off of the predicted VantagePoint indicators. And this looks like this would have been a successful opportunity right out of the artificial intelligence today. All right. All right, let's see. Apple. All right, so Apple, let's pull up Apple. That's something somebody put up in here. Take a look at Apple based off of this information. I'm gonna go add some of these indicators that we've been looking at. I'm just gonna save them as my default, and I'm gonna put them on this Apple chart for everybody here and take a look. Load from default. Again, these are some tools, and if you got the VantagePoint software, you may know how to do this. If you don't, and you want some questions answered about how to do this, well, you can see that Apple had a very bullish indication going back to 3.3. Popped up, gapped up, pulled back a little bit, but still, the artificial intelligence, that blue line is still above the black line, indicating more bullishness in Apple. VantagePoint's forecast for Apple is that the predicted high at this point, look in the top left corner, I can see the predicted high of 152.94 predicted in Apple. So we should see Apple trading around that gray bar, let's call it 153, with a potential low of 148.45, but we do have bullishness in that trend still. Probably not expecting it to go much lower. So we're expecting Apple to be around that 150 predicted high 152, 153 range today, and this would have come out at 6:30 last night. And you can see the bullish opportunity on Apple would have been back on what is that, 3.3, 3.6, so a week and a half ago. Natural gas, NG. Let's take a look at natural gas. Not necessarily a lot of options traders on natural gas, but I know Pat. I know that's something that you're looking at from a natural gas standpoint. Big downtrend. And for those who like to swing trade natural gas, there's a crossover here that is very, very valuable to short term. That'll get you 2 or 3 days at a time. And you can see from a natural gas standpoint, what we're looking at is a bearish trend that's coming to an end from a forecasting standpoint. You know, that's one of the things that a lot of people have to understand is that these indicators have the ability, and I don't know if you're using these indicators or not, but these indicators certainly have the ability to give you insight onto what's expected to happen. It says this bearish trend is likely coming to an end. But what a lot of traders try to do is use that as a bullish indication. It's not. It's not. It's information around whether or not you could expect this to keep on sliding bearishly, Pat, or move sideways. Right? The best thing that I would say from this forecast is consolidation. Why? Well, my blue line is underneath the black line, or the gray line, if you will, and it's moving sideways. My neural index turned green, but my momentum is sideways. This momentum is bullish. This momentum is bearish to sideways, and this is sideways. So I've got indicators that don't agree. For those of you that have never seen VantagePoint before, maybe you don't even trade natural gas and you're a stock person. You could probably look at these indicators and see these don't agree like they did before. If they don't agree like they did before, then I've got to take that information and use it to my advantage. What's my advantage? Can anybody tell me what that information could be telling me? Let me look at the chat really quick and see if Pat had this figured out as well, because you might have already figured it out. Pat, were you expecting consolidation? Because that's what when those indicators don't agree, remember these are artificial intelligence indicators. And whether I'm trading the underlying asset or doing the option, they don't agree in this case, which means I can expect consolidation. Also, take a look at support and resistance. You can see support and resistance is creating this channel right here. So there might be some really good short-term opportunities in here, but for right now, the artificial intelligence is indicating a sideways move or consolidation, right? What about expiration being 60 days? What would the delta be? The delta is going to be specific to your strike price as well. And that's, Alex, I see your question around that. With your expiration being out 60 days, you got to find a strike that has a good delta. You know, the lowest delta, personally, I'm willing to consider is 50. A good delta, a really good delta is around 60 or higher. The higher your delta, Alex, the more your premium is going to cost you, right? The more your premium is going to cost you. Let's see if I'm missing out. A lot of comments coming in. I'm trying to take a look at here. Waiting on the turn. There you go, my friend. Waiting on the turn. I like the way you think. Use those indicators to your advantage, right? Wait for that strength to build in. Wait for that strength to build in. On what, ML? You're asking about the neural index strength. Throw it on what chart? Or what chart are you looking at? Are you looking at natural gas? Are you looking at Apple? Neural index strength is an indicator that, as you can tell, some of the users have as part of their tool set, right? Not everybody has it, not everybody uses it, but this is a momentum indicator that was created to help you understand whether the momentum of the neural index, which we'll get into at another time, is bullish or bearish. And you can see on natural gas, even the momentum of the neural index is sideways. So Pat, your assessment is the same as my assessment, my friend. Consolidated on natural gas. ML, I'm asking about which asset was it? Which asset was it, my friend, that you wanted to see the neural index strength on? I'm happy to pop it on. Maybe it was natural gas. Maybe it was Moderna. Not sure. Oh, look at the time. Wow. Well, we've gone over a lot of information. If there's a last minute question or a last minute ticker you might want to take a look at, pop it into the questions box. I think somebody put in gold earlier. I can throw gold up on here, GC, if I remember correctly. That was one of the tickers that came up. You know, gold has been acting like a safe haven. Look at that. Really great trend on gold that was captured for yesterday. Day before yesterday, which would have been Friday's trade day, there was bullishness expected in gold, and yesterday's move in gold was forecasted very powerfully with the artificial intelligence. That's a great move. That's a great move picked up by the AI. Seasonality. Yes, sir. Hey, Steve. What's going on, buddy? Can't wait to see you in April. Okay, it was on natural gas. All right, well, I think we've gone pretty well into the details. If you have more questions about these indicators, reach out to us. If for some reason you're not a VantagePoint user, and not everybody here is, I get it, or you're watching this on replay and you've got some questions, or maybe you want to take advantage of something like this, just go to VantagePointForecast.com, click on the link in the chat, in the profile. Don't forget, subscribe to the VantagePoint AI channel. Set up your notifications for these lives. They happen every couple of weeks or so, and we're happy to walk through the details. Also, leave some comments if you want to leave some comments around some things you'd like to see in the future lives. You know, at the end of the day, our goal is to empower as many traders as possible and give you the opportunity to use tools like this if you want. If not, come and watch these, and I'm happy to go through the details. So thank you for the time today. I'm going to sign off, and thank you for letting me give you the view from my vantage point. I hope everybody has a great day and happy trading.